on the panel by DG Ngozi, by Bob Koopman, our chief economist, by Bright Okugo, the chief of staff, and by Coleman, our chief economist. The Director General will give an opening statement. Bob will give a brief overview, and then we will take questions. My suggestion to you is to pose your questions to the DG because she has to leave at around 12:30. I remind you that we have interpretation, and Dan will be very unhappy with me if I don't remind you as well that this press release is under embargo until 1 o'clock. We will be carefully monitoring. We would expect you to adhere to that embargo. And now, without any further ado, Director General, you have the floor, please.
Well, thank you very much, Keith, and good morning, or is it good afternoon, everyone, both those in the room and those joining us online. I want to thank you for joining us for the launch of our trade forecast for 2022 and 2023. Before Bob and Coleman delve into the details, I wanted to share the headline numbers and make a few broader points on the current situation that we are confronting. The last few years have been tumultuous for the world economy. The COVID-19 pandemic continues to deliver economic shocks in different parts of the world, and we must now brace for the fallout from the war in Ukraine. The horrendous suffering and loss of life in Ukraine is heartbreaking. I joined the UN Secretary General, Antonio Guterres, in calling for the bloodshed to stop. The economic reverberations of this conflict will extend far beyond Ukraine's borders. It's now clear that the double whammy of the pandemic and the war has disrupted supply chains, increased inflationary pressures, and lowered expectations for output and trade growth. These events and the enormous uncertainty they have created make for a complex forecasting environment. Growth in trade is typically linked to growth in economic output. But in the absence of key GDP data that reflects the impact of the war, our economists had to rely on in-house simulations to generate reasonable GDP estimates, factoring in considerations, including Ukraine's devastated infrastructure, the effect of the sanctions on Russia, and declining demand brought about by the erosion of business and consumer confidence. All this means that the projections are less certain than usual, which is described in the detailed write-up. That said, we would now expect world merchandise trade volumes to grow by about 3% in 2022. This is 1.7 percentage points down from the 4.7% growth we forecast last October. Trade growth in 2023 is estimated at 3.4%. The forecast projects global GDP growth at market exchange rates, that global GDP at market exchange rates will grow by 2.8% in 2022, down from the 4.1% projected prior to the war. But given the fluid situation, we estimate that merchandise trade volume growth in 2022 could be as low as 0.5% or as high as 5.5%. You now see the range, and this tells you what we are talking about with respect to uncertainties in the forecasting. If things change significantly, we will release revised projections before a scheduled update in October. The most immediate economic effect of the war has been a sharp spike in the prices of food, energy, fertilizer, and some important minerals, for which Ukraine and Russia are key suppliers to world markets. A potential food crisis is looming. Food and energy prices were already high by historical standards before the war. Low-income food deficit countries saw their food bill rise 20% in 2021, an increase of $120 billion. Since early January, according to the International Grains Council, spot prices for wheat have risen as much as 31% before falling back to 21%, to a 21% increase as of last week. Soybeans are up 14% and barley by more than 30%. 35 African countries import food from Ukraine, Russia, or both. The problem of high food prices is compounded by high fuel prices, and expensive fertilizer represents a threat to future crop yields. Supply chains already strained by the pandemic have been further roiled by the war. The WTO is working with shipping companies, port operators, logistics firms, and other businesses to identify specific problems and solutions to supply chain disruptions. Structural issues from labor shortages and underinvestment in physical infrastructure to insufficient use of digital technologies for supply chain oversight and border clearance help lay the groundwork for today's woes and need to be addressed. Proceedings at the WTO have not been immune to challenges resulting from this conflict, but it is simply inaccurate to say, as some have, that the WTO has been paralyzed since the outbreak of the war. We have developed workarounds that have enabled us to conduct business, even with diplomatic tensions running high. True, some smaller meetings were slowed down or canceled at the beginning, but our regular negotiating councils and committees are meeting, and we have seen work recommence on our negotiations, including the joint statement initiatives, with meetings earlier this month on e-commerce and investment facilitation. The General Council last month reached a decision on agricultural market access that will put into play tens of millions of tons of additional export opportunities in wheat, rice, beef, cheese, and sugar markets. The dispute settlement body is meeting and trade policy reviews are being conducted. We continue to monitor trade in food, and the WTO is part of the steering committee the UN Secretary General has set up to respond to the food crisis. 2 months from now, in mid-June, we're set to host our 12th ministerial conference. As you know, it has been twice postponed. The conference will be held here at the WTO. The circumstances warrant that we make this a business-like, streamlined affair with little pomp and circumstance. This makes it even more important that we continue our efforts at every level to deliver results, even before ministers meet. The pressing issues of food security, the response to the COVID pandemic, and the health of our oceans cannot wait. We have a responsibility to bridge gaps and deliver for the people we're here to serve. We need to be flexible. We need to be open to doing things a bit differently, and we need to keep going. Thank you very much.
Thank you. Bob? Thanks, Frank. Yeah. Well, good morning, good afternoon, and good evening, I guess, depending on where you are online. As the DG indicated that this latest developments in Russia-Ukraine conflict really puts the trade forecast in a highly uncertain environment. It was already very significantly impacted by COVID and other supply chain disruptions. And we have an extremely difficult set of circumstances in the global economy. So going from very strong global demand in 2021, in fact, global demand was so strong, it put significant pressure on disrupted supply chains. To what we're looking for in 2022 and perhaps continuing into 2023 is much weaker demand due to inflation having adverse impacts on consumer expenditures, probably a retrenchment of fiscal policy, monetary policy also retrenching with increased interest rates, which is likely to both reduce investment and consumption on the demand side, and an increase in economic uncertainty also contributing to a decrease in investment and consumption. As the DG mentioned, global trade is often driven by GDP growth. We have a significant reduction in global GDP growth compared to the previous forecast. And investment is often a big driver. Interestingly, in 2021, consumption was a big driver of global trade and global GDP growth. Those are all now subject to significant uncertainty.
We also have on the supply side, the Russia-Ukraine conflict increasingly disrupting supply chains and taking a lot of production capacity out of the region and the global economy. We continue to have challenges around COVID, and this increase in uncertainty on the demand and the supply side is reinforcing investment declines and therefore reducing the future capacity of global output. So we've had these three major shocks. We started with global trade conflicts in 2017, then we've had extended COVID disruptions, and now we have war. So the interesting thing from my perspective as chief economist here is the resilience of global trade to all of these disruptions. And we continue to expect trade to grow this coming year, despite the fact that it'll be much weaker than we thought. So trade remains resilient, and I think that's important to realize. We do think that GDP's impact on trade this year compared to historical practices will be less. And part of that is due to increases in trade costs from the supply chain disruptions and the disruptions we're seeing from firm uncertainty as to how the global economy will evolve, including in the trade environment. So we expect the ability of trade to respond is not only hit by GDP, but rising trade costs. So that's my sort of economic overview, and let me stop with that and open it up to questions. Thank you.
Thank you very much, Bob. Let's take some questions. Let's start with folks who are here and begin with Bryce Bashuk, followed by Laurent Serrault. Bryce, you have the floor, please.
Hi, Bryce Bashuk with Bloomberg News. Thank you for taking my question. Director General, how has the Ukraine war affected the three deliverables that you've targeted for MC12, namely fishery subsidies, agriculture, and the IP waiver? Are these still on track for conclusion in June? Thank you.
Thank you, Bryce. That's a very good question. There's absolutely no doubt, as I said in my introduction, that the war has introduced tensions and made it a bit more difficult to work. We are working, but undoubtedly, this has impacted the way we are working. So we found workarounds, ways to try and negotiate on the three deliverables we are talking about. We are trying, we are working on them, but depending on what happens as we move along, we'll have to see which ones of those we can actually deliver. It's a highly uncertain environment. So I can't promise that as we had wished, we will be able to deliver all three. I cannot say that. We will keep working on them and we'll see what the atmosphere is with respect to when the ministers get here and how much we can expect them to engage each other in negotiations. But we will try to see if there are any of these we can actually sort of work on and try to bring us close to convergence as we can before the actual MC12.
Thank you. Laurent, vous avez la parole.
Yeah, thank you. Thank you for taking my question. That's a kind of follow-up to Bryce's question. So we all know that to deliver at MC12, the membership will have to embrace also Russia because there is the need for a consensus. How concerned are you that further sanctions, like for instance, embargo on gas and other energy products might further deteriorate the climate of discussion and that possibility to reach consensus with Russia? Thank you.
Again, I think that's a really good question, and it's a real risk that could happen. I mean, it adds to the uncertainty because we don't really know exactly how things will work out. So it's a risk. We admit it's a risk. And if that happens, we'll have to see how it impacts the way we work. As I said, we found ways of arranging ourselves that enables us to continue working at the moment. But obviously, if there are more actions, we will have to see how it impacts the mood, the ability to negotiate and conclude things right at that point. What we are trying to do is to see as at now, if there are any pieces of these deliverables we can work on and try to bring as close to a convergence or conclusion before the meeting actually takes place. But you're absolutely right, there's a risk. Thank you.
We'll take a question from Christian Ulrich, and then we'll take a question online from Emma Farge of Reuters. Christian, you have the floor, please.
Thank you. Director General, can you be a bit more specific of how the war is actually impacting negotiations on fisheries? Because there's not a direct link. Is this that Russia or Ukraine is torpedoing negotiations out of spite, or out of a lack of time, or are the ambassadors not here? What exactly is why is the war making negotiations in the WTO more difficult? Thank you.
Well, thank you very much. I think that, of course, given the circumstances we have, there are members who express their views as to what the war is bringing in terms of impact on both Ukraine and the globe whenever we have meetings, be they plenaries or committee meetings. Russia as a member also expresses its views. Ukraine does, the other members do, and Russia does. And so the diplomatic tensions, as you can expect in this, and political tensions. But what we've tried to do is to find small groups where we can respect everybody's sensitivities. Obviously, it's more difficult to have the plenaries because of this. So that's the issue. And some of the negotiations are done in plenaries. So what we've done is to try to work in smaller groups in order to manage this, where people's members' sensitivities can be respected. So it took a little bit of time, when this happened, to figure that out. That was why at the beginning, work kind of slowed down as we tried to find a way. How could we navigate the tensions? And I think we found a way of proceeding now where we can have small groups that can negotiate with each other. We also have a lot of bilateral consultations now between members with the chairs consulting bilaterally that we've also introduced into that. So I think between all those methodologies, we're managing to keep things going. But that shows you where the tensions and the difficulties lie.
Thank you very much. Let's take a couple online, first from Emma and then from Jamie Keaton of the Associated Press. Emma, you have the floor, please.
Good afternoon. For the Director General, but perhaps also for
Wait, Emma, can you wait for the DG? Okay. Okay, go ahead.
Question for the Director General, but also for the Chief Economist, please. I'm wondering how high you assess the risk of supply chains actually being rerouted in the long term around the geopolitical considerations and creating parallel trading systems. And what do you think can be done to prevent that at a WTO level? Thanks.
Thank you, Emma. That's an excellent question. Obviously, there's a lot of talk about decoupling and different trading spheres and this impacting supply chains. So there is a risk, we have to admit that, but this is not what we really think should be the case. I think we need to stand back a bit and take a deep breath and try to remember, multilateralism and multilateral trade and the multilateral trading system, what it has been able to deliver. It's being challenged now. There's absolutely no doubt about that. There's a big challenge. This organization and multilateral institutions were created to integrate countries, to create interdependence, which would lead to peace. And it's clear that that's being challenged at this time. So we have to admit that. But that should not lead us to draw the wrong conclusions, that the way to now move forward is to break into these different trading spheres. Because I think the costs to the global economy will be quite significant if we do that. The efficiency costs, the other costs that would come with it, and Bob can say a little bit more about this, will be quite high. So I think we should really, we're advised to think really carefully before that, before we think of breaking into different spheres and different supply chains. I think with respect to supply chains, actually, we should be worrying more about some of the near-term and structural problems that underlie these supply chains. Some of these had been existing even before the pandemic and the war, but are being heightened by the impacts of the pandemic in particular, and now the war. So we have the supply-demand problems that were created when people with, the fiscal resources they got during the pandemic, particularly in the United States, where, they were shopping online, demanding things that were not services because everything else was closed down, and they were buying goods. And of course, this led to an unprecedented increase in demand that the supply was not adequate to take up. Whilst this may be slowing down now, it was before the war came, we now have the issue that there are structural problems in the supply chains. What do I mean by that? We have things like port congestion. We've had these large ships that have been built, sometimes ports not adequate to fill these ships. We had a meeting with all those in the supply chains, from port operators to shipping companies to businesses. We had them to a meeting here about 3 weeks ago. And when we listened to some of the things they had to say, I think there's a need actually for these structural problems to be focused on. So adequacy in ports, warehousing, labor, particularly labor on land, truckers to be able to, shortage of truckers to remove goods. These are some of the issues that are not that easy to fix, and we should pay attention to, because even if there's no war, these are still issues that will be with us. We have, transparency of information across the supply chain. Many of them raise that, and the need to digitize in order to make this easier. We have port procedures and other customs procedures that delay things. Luckily, a trade facilitation agreement, its implementation will be helping with some of that. But you can see that there are a number of issues that are still, I'd call them structural, that are there. We should worry about in supply chains, in addition to some of the other risks we face. Thank you.
Yeah, I'll just quickly add that from an economic perspective, we've not seen a decline in globalization. There's been upward and downward movements around globalization due to shocks at a fairly high level. What we have seen is a reorganization, what Director General Ngozi refers to as reglobalization. This started before the trade wars. It started as wages were rising in China and expenses were going up, and Chinese government was putting more premium on environmental outcomes. So there was outward FDI. So Chinese firms and Western firms were looking for alternative sources. With the trade wars, then we saw more outward reorganization of global supply chains. And what we see now is increasing economic and political risks in how firms organize their supply chains. But so far, there's been no evidence of reshoring. There's been evidence of this reorganization of globalization. But this is something we're going to have to watch very closely. And I do think the political risk has risen even more in this past year that could put more stress on the system. So we'll have to see what happens. Keep in mind that the WTO is very, very useful when it comes to trying to solve global commons problems, climate change, COVID, these global health issues. Those things are very, very hard to deal with in regional settings or separate geopolitical spheres. They are global issues, and the multilateral trading system is the best place to try to deal with those. Thank you.
Quickly.
I would just note that in the last year and this year as well, we've made efforts to incorporate in our trade forecasting techniques data on container throughput of ports in the United States and China. So this forecast reflects, at least in the transition period, some of those supply chain bottlenecks.
Thank you very much. The next question is for Jamie Keaton of AP. Jamie, you have the floor, please.
Thank you, Keith. Thank you, everyone. I just wanted to follow up a little bit. How much do your forecasts consider the possible impact of an eventual EU cutoff of Russian energy supplies, both to the EU, to Russia, and beyond? And then, DG, you mentioned that 35 countries in Africa have been impacted from the food supply issue coming from that region. What does the forecast predict about the impact on those countries, as well as those in the Middle East and elsewhere, concretely on the people? What can the people in those countries expect now, given the food supply issues? And if I could just slide in one last one, you mentioned that you're going down from 4.7 to 3. Is that entirely due to the Ukrainian-Russia conflict, or is there another factor? Thank you.
I'll start. I'll just speak about the impact. I'll leave the EU, the forecasting issues to Bob and Coleman. But what I wanted to perhaps answer is the impact on poor countries in the world generally. And then, as I said, 35 countries in Africa, both middle income and low income countries who trade in both food and fertilizer with the Black Sea are seriously impacted. What does it mean? The African Development Bank has already estimated that in many countries, food prices have risen from 20 to 50%. This is really significant. There was already pressure, as I said in my statement, even before the war, but this has now heightened with the fact that the grain supply, particularly in countries like Egypt, as we all know, Tunisia, so many other countries get part of all of their grain supply from here. So we can expect inflation, which is already there in many countries, high food prices. And of course, who are those who suffer the most when you have these kinds of situations? Inflationary pressures hit the poor because food and energy is a significant part of their consumption basket. So this is why we need to act decisively on this issue of food in order to avoid food riots, as the like of which we began to experience in 2008, 2009 food crisis. And we're already seeing in some countries now, you see demonstrations in Sri Lanka, in different countries all over the world. We don't want that to happen in countries in Africa. So I just want to say the UN Secretary General has set up a steering committee to look at energy and food crisis. The WTO is part of the food group. And one of the things that we are trying to do is make sure that trade-wise, there's a freer flow of goods. So to be very transparent in our monitoring function of the export restrictions and prohibitions, so we know from our members who has this and how they can refrain from putting these so that there'll be a freer flow of goods. We've also talked about those who have additional buffer stocks to be able to release these stocks on the international markets so that this can bring down the price of food and make that more affordable. We have to look at the issue of the harvest in Ukraine and planting season, both for the impact on food this year, but next year. This is planting season for the spring crop. We hope there'll be some kind of humanitarian corridor so that farmers can plant. But more importantly, 80% of Ukraine's wheat is harvested in July. That's the winter crop. And there has to be, we hope there can be some kind of humanitarian cover so this can be harvested. And so they can also plant the next winter crop in September. So what happens now in Ukraine, the ability to harvest that winter crop will be highly significant. I think the second thing that we need to look at is freedom of movement of what is already stored in in their granaries. Can they move, is there a way that the ports, Odessa and so on, can be used better? Can we move some of this food through Europe by trucks? What are the obstacles that lie in the way that would allow this? So there are various actions we need to take now to be able to avert a food crisis. So let me leave it there, but this is highly important.
Thanks, Jamie. So we don't have a specific element in there about the EU cutting off energy supplies. We do have a Russia-Ukraine segment in the forecast, a specific shock for that, but it did not extend to a cutoff of energy supplies. We can't anticipate every shock that could come along, whether it's in the Russia-Ukraine conflict or elsewhere in the economy. What we do have in the forecast is a negative element from Russia-Ukraine. It's probably the most negative element in the forecast. There are other negative elements in the forecast that are less negative, but still negative. So that's why when you look at our trade forecast compared to a recent assessment we did of Russia-Ukraine, our global forecast is slightly higher than just the Russia-Ukraine impact, because there are other things that are less negative. And so I'll stop there. Thanks.
Thank you very much. Okay, let's take two more online. The first from Sarah Ann Arup from Politico, et puis de Anne Cheval de Figaro, s'il vous plaît. Sarah Ann, you have the floor. Thank you.
Thank you very much. So my first question is about Ukraine. So do you have any numbers on the export slump that Ukraine is currently going under? And second of all, I was wondering, so for the DG, in which negotiations have you unlocked a new way of working? And what is your sense about a ministerial conference declaration and WTO reform in this context? Thank you.
Oh, sure. We'll take the export question. Go ahead and do the other.
Okay. Thank you. I think in all the negotiations we have going on, certainly, let me start with the negotiations or the informal discussions we're having on trips. We've been able to use the methodologies, the same actually with fish, the same with agriculture. We've been able to use methodologies of working in small groups combined with bilateral consultations. The same with the GC General Council Chair, who is also leading some of the discussion, and the facilitator, the former General Council Chair on the trade-related aspects of the response to the pandemic. All of us working on this are trying to work through bilateral consultations and in small groups. The JSIs have also just started using the same methodology, and I think that is helping us. As I said, it was initially slow as we tried to figure out how to do this, but we are using that approach now in all our negotiations. It's not as easy to do plenaries as we used to be able to do. So this is the way we are working. And then you asked a question about,
Ministerial declaration.
Ministerial declaration and WTO reform.
Right.
We obviously are watching the situation to see what will happen with the war and tensions closer to the ministerial. But as we speak, the General Council Chair has been discussing this issue of ministerial declarations, possible outcome document, or what form the ministers could speak in. So various options are being explored as to what we could deliver, and that's where we are, but we're actively meeting and working on that. And on WTO reform, this is really very, very important. Virtually every minister, ambassador I've spoken to, it's still harping on the need to make progress on this. So I think that at the ministerial, we will find a way to see what can be said. What we're hoping to do is to perhaps agree on a process to move forward on this, so that by MC13, we would have a series of things, work programs to be done. So let's see, this is still very topical, and I hope we can manage to agree on a process for that moving forward. Very important. The food crisis obviously is also a very important topic for us now. It wasn't one of the 4 deliverables like fisheries, agriculture, response, but this is obviously an area that ministers will be looking at as well. Thank you.
Yes, just in response to the question about whether we have any data, hard data on the impact of the war on Ukraine. In fact, we don't. Merchandise trade data in general are released with a bit of a lag. We only have 1 or 2 countries that have first quarter data yet, and a few that have data through February, but not covering the period of the conflict. And so that's one of the reasons why we mentioned the difficulty of forecasting under the circumstances and why we relied on simulations. And as a result, we'll probably revisit the forecast before our next scheduled forecast as hard data come in, and we can reassess how our projections look at that time.
Okay, the DG has time for one more, and it's from Anne from Figaro. Anne, vous avez la parole, allez-y, s'il vous plaît.
Good morning. I wanted to ask a question regarding the protectionism risk you mentioned quickly. How are we already seeing some protectionist signals, and from which countries, please?
Well, thank you very much. Obviously, I think this issue of protectionism predates even the pandemic. Fears about, people or countries retreating to protectionist measures. This is obviously not something that we encourage at the WTO. And there's also a lot of talk because of the supply chain concentrations that we've seen with the pandemic and the war, as Bob spoke to this, of reshoring, onshoring, nearshoring, industrial policy making a comeback. We've seen allusions to the start of semiconductor industries in particular countries or regions. So one may say, yes, I think the times we live in now may lead countries to look a little bit inwards more than they would have. Again, this is not something we encourage at the WTO. I'm sure there will be some of that. There will probably be some industrial policy, some reshoring. But I want to stress what Bob said. This is not the overwhelming trend we see at the moment. And I think that business people are making decisions, managing risks. I think the way they are seeing this whole situation is, how do we better manage our risks by nearshoring and deconcentration. Inventory accumulation is another strategy that they're using. So I think in future we may see some friendshoring, shifting production to countries that are friendly. There may be some of that. But I think overall, we shouldn't exaggerate the importance of that these will take. Let's just watch and see. What we are actually noticing on the ground is countries doing more of nearshoring than reshoring. So grosso modo, yes, there's a risk because of the supply chain snafus, the weakness, the concentration we've seen in supply chains, the circumstances we're living with the war, that we will see some of these protectionist tendencies. But we are not observing them overwhelmingly. I know it's difficult to say that because it's very fashionable now to talk of decoupling, bringing everything in, reshoring. We are just not observing a whole bit of that, actually. Some of that will happen inevitably. I'm not trying to underplay that. But we hope from the WTO standpoint that we remember the gains to be made from a multilateral trading system. And I want to end with what Bob said. We hope that any changes in the nature of globalization will be what I call re-globalization, actually using globalization as an instrument to bring in those countries that have been marginalized through the nearshoring that we talked about, the concentrated production to those countries. We've seen it happening with Bangladesh, Vietnam, Ethiopia. We could even see it. We are encouraging and saying it would be a good instrument to use to bring in other poor countries or developing countries that have the capacity to manufacture in them and to be homes to these supply chains. And so see it as a positive instrument to help bring in the marginalized countries and peoples rather than anything else. So thank you.
Thank you, Director General. Bob and Coleman will be sticking around a bit to take your questions to them. I'm going to turn the floor over to Dan for a few minutes, and I'll return after I escort the DG to her office. Thank you.
Just thank you all for coming and for excellent questions. It's us on our toes.
Thanks, everyone. Just a reminder to everyone that the embargo on the trade forecast is until 1 p.m. Geneva time. We still have about 60 more minutes in this embargoed press conference. So at this point, if I can start, we had a question in writing from Eleanor Ragg from the Global Trade Review. And the question to our economist is, the confidence interval for the 2022 forecast is quite wide. Merchandise trade volume growth in 2022 could be as low as 0.5% or as high as 5.5%. What are the downside or upside factors that could push trade growth to the extremes of this forecast, either at the top end or the bottom end?
Thank you. The forecast, the confidence interval is a one standard error band around the central forecast. And in general, time series models have pretty good predictive capability, but forecasts get less and less precise as you go forward. Things that could lead us to one or the other end of the interval, most likely on the downside, I suspect, would be a worsening of the conflict in the Ukraine, and also perhaps sanctions directly on exports of Russian oil. But on the upside, perhaps there might be some sort of resolution of the conflict. But those are the only things that I can consider that would lead to an upside outcome. At the moment, I would say most of the risks are heavily on the downside. This is also, as I said before, we've relied on simulations because we have very little hard data on GDP, but also on trade. Our trade data are only available through the fourth quarter, our trade volume data of 2021. And so as we get first quarter data, second quarter data, we'll get a better idea of how the estimates are panning out. And we will revisit the forecast at some point just to ensure that it is on track. So.
Thank you, Coleman. I'm just checking the room to see if anyone physically present here in Geneva has a question. I don't see any hands raised. Bryce, can I take one more from Zoom and then I'll get back to you since it'll be your second chomp at the bit, I think I'd call it. Ravi Kant, your hand is up. You have the floor. Ravi, are you there?
Yeah. Can you hear me?
Barely, Ravi. If you could speak a little bit louder, please.
Yeah. Can you hear me?
Closer
now?
to the mic.
Yeah. Thank you for giving me an opportunity, but this opportunity I wanted with the Director General, and as expected, Keith Rockwell for the nth time denied this chance. I have no questions to ask now.
Thank you for that, Ravi. I also see the hands of Jamie, Emma, and Anne still raised. I'm going to assume that you had your questions answered and no longer interested. Bryce, I'll go to you now.
Thank you. This is directed to either Bob or Coleman. Two questions. The first is, what was probably the most interesting thing you took away from the data that you saw? You said it's up to the fourth quarter. And the second question is, have you seen any kind of or the trajectory for some of the supply chain problems for last year? I'm thinking in particular semiconductors. Are you seeing an amelioration of that? Are there any changes worth noting? Thank you.
Well, I think in terms of the evolution of data at a high level, Bryce, I think the surprising thing was this strength of global trade through 2021 and into early 2022. And a big part of that is well known, is this compositional shift from services to tradable manufactured goods. Another interesting element was that much of the supply chain challenges came, as we've heard, from logistics firms on the land side. So you see container throughput at all-time high, but not high enough absorptive capacity on the land side in places like Long Beach, and it's now congesting in other ports in the United States, but it's also been congesting in Rotterdam. That disrupts the overall supply chain, because as long as ships are sitting there, they're not able to then move on and carry more goods, right? So, I mean, this has been well discussed, but I think this has been very interesting for us to get a sense of how strong demand drives trade, as well as how health policies and other economic policies can shift the composition of overall demand and impact what had been, I think, finely calibrated inventory approaches and supply chain delivery approaches. And now firms are basically having to rethink that. And now there are these bigger geopolitical shocks around that. One thing Coleman didn't mention was Shanghai being locked down. If that lockdown continues for a long time, spreads to other Chinese ports, then you get another health policy COVID element coming in and driving us towards that lower end of our range. Your second question, remind me again?
Just I'm interested in semiconductors.
Oh yeah, semiconductors. Yeah. Well, I'll make one point, and then Coleman. It takes a while to be able to build a semiconductor fab, right? So that's not something that's going to happen overnight. Another interesting element in the data has been what we in economics call substitutability, and you can reorganize your supply chains, substitute to other suppliers, but you can also reorganize how you produce things, right? So automobile manufacturers are shipping automobiles with chips missing and basically telling consumers that they'll reinstall the chip when they come in. So you see a lot of adaptation and innovation in the private sector to try to mitigate some of these supply chain disruptions. And, I would hope that we find a balance between government policy trying to find a solution and private sector innovation and consumer adaptation to changing relative prices. I think all three of those are important to try to find ways to solve some of these challenges that we face. Coleman, do you have something more specific on semiconductors?
Yes, we did some mirror estimates of trade in semiconductors, and it was rising over the last several months, which would feed into the automobile sector and reduce some of those production stoppages. As for shipping, we saw a gradual amelioration there as well in Long Beach. In the first 2 months of the year, container throughput was up about 12% compared to the pre-pandemic period. So we saw more efficient operations in ports, and these things would be expected to gradually whittle away at some of the backlogs. Unfortunately, we've had this new shock that may compound some of those problems. One thing that could affect the automotive sector is Russian exports of palladium, which is used to make catalytic converters and accounts for 40 to 50% of imports of palladium in countries like the United States, Korea, Canada, Italy, other countries that are large automotive producers. Yeah.
Bryce, I have one more point. The semiconductor intensity of many goods, including automobiles, is increasing dramatically. And so the projections for semiconductor demand have been going up. And I think that's important to also recognize. It's not just some supply chain constraints, but there's been compositional shifts in demand, particularly as automobiles get smarter. Well, many products are getting smarter, right? It's not just semiconductors. They're going into refrigerators and washing machines and toaster ovens. So it's quite interesting to see how the world economy evolves and how it adjusts. But supply chain disruptions are not helping with that adjustment.
Thank you, gentlemen. We have a couple more questions we'll try to squeeze in before the end of this press conference. We have John Zarakostas online. John, you have the floor.
Yes, good afternoon. My question is to the two eminent economists on the podium. If you could elaborate a little bit more on the potential impacts if the situation in China deteriorates, as you've indicated, and now we've seen the COVID spreading to Guangzhou, another major area of China besides the Shanghai area. So what would be the impact on manufacturing and supply chains and on inflation? Thanks.
Thanks, John. From a trade perspective, it pushes us into that lower end of our scenario. The downstream impacts, I think, are pretty significant. So keep in mind that even small parts and components that relatively low value in trade can hold up the value of output final product to be multiple times significantly larger compared to the value of the trade impact. So, and I think that's why many governments and many firms are so concerned around these kinds of challenges. I can't tell you right now what the specific impacts would be. We'd have to do an assessment of the kind of exports that are coming out of those ports. Maybe Coleman has some insights on that.
I don't have specific insights on that, but I would note that you can see the impact of the Delta variant in our trade volume data for the third quarter of last year in chart 2. So you can see that trade was recovering and then we had a dip as a result of that. So we could expect something similar, maybe worse.
Thank you. We have a written question from Sandri Piergiorgio of La Vanguardia. And he writes, just an update on supply chains. Have you made an estimation of the increase of shipping costs in the last 12 months? What are your forecasts for the rest of the year?
We don't provide a specific forecast on shipping costs, although we are following the data very closely. Our services division has an expert who follows this. The Director General held a forum here recently engaging with many logistics providers, including shippers, to hear what their concerns and challenges were. We do have some research that suggests, I think, if I remember correctly, that logistics costs represent about maybe 20%, 25% of total trade costs, moving goods from one part of the world to the other part of the world, but I'd have to confirm that for you, John. I'm sorry, this wasn't John, this was
Sandri Piergiorgio.
So if you are interested, please send us an email and we'll get back to you on that specific element. I do think we had seen those trade costs, freight costs starting to mitigate some. The backup at ports was declining. If trade softens a lot, you'll see those trade costs, probably those freight costs, continue to decline. But we are on a thin margin, so small adjustments in supply and demand and could result in a fairly large price response one way or the other.
Yes, the Freightos index, which is a global index of container shipping costs, rose from about, I think, $1,400 per TEU to 11,000 in October. But then since then, it moderated to around 9,000. So 9,000 plus. But you saw some mitigation of that price rise, but its shipping costs still remain high as of April.
Thanks, gentlemen. With 2 minutes to go until the embargo ends and the press conference, we had one request for clarification from Jamie Keaton of AP, who said he wasn't sure you answered his question about the shift of the forecast from 4.7% to 3%, whether that was only due to Ukraine. You may have addressed that in your answers already, but if you could clarify for him.
It is not just Ukraine. Multiple factors there. Ukraine was the most negative aspect, at least in our opinion, that we incorporated into the forecast. The uncertainty going down to 0.5% would include other things like, extended lockdowns in critical supplying cities or manufacturing areas in the world, such as Shanghai. But we incorporate implicit in our econometric forecast other developments which were less negative than Russia-Ukraine. Now, the specific elements of those are hard to sort out from our aggregate econometric model. We didn't run specific scenarios. I suspect as things develop here over the next few months, we may consider doing more specific scenario analysis if some of the, if the oil and gas cutoff occurs or something like that, we might consider a more specific set of scenarios to add to our forecast.
I would add the thing. Before the conflict started, we were already seeing GDP estimates being reduced for 2022 and 2023. And then when the conflict started, we didn't have new estimates, so we used our trade model, our global trade model, to scale down the existing estimates. So it includes both the declining GDP growth beforehand, plus the GDP impact of the conflict, which translates into reduced global import demand. And yes.
Yeah, so by the way, just to be clear, some of those things in the GDP, implicit in the reduced GDP numbers, were things like Omicron continuing to spread, but also inflation reducing consumer purchasing power, fiscal policy retrenchment, interest rate increases. All of those things are essentially elements built into our scenario for GDP forecast, which then affects the trade estimate. And we added elements in there related to Russia, Ukraine, and increasing trade costs due to some of the supply chain disruptions. Thanks.
Thank you both. Perfect timing, as my phone shows 1 o'clock, or actually 1:01 p.m. The embargo is now lifted. This embargoed press conference is no longer embargoed. If you have any further questions, feel free to submit them in writing by email, and I'm sure our chief economist and senior economist will be happy to answer them, or delighted even to answer them. Until then, thank you very much for having attended this press conference, and wish you a pleasant day. Thank you.